Hey traders, Nick here recapping an epic week. Yes, another epic week. Today is 2/9/2018. Alright, so Friday. Let's start with Friday. Long story short, closed green in a big way, and actually I say in a big way because it had its moments. So, the indices closed well green, but the moments were a little scary. We opened okay, and then we had a swoon in the middle of the day. It was like, oh, here we go again, another sell-off. But then we flipped and closed green. Now there were some leaders. This is much better than a couple of days before. I believe this was Thursday close. So yes, we're happy that we did close green. We had our moments, but we withstood the dip, the bulls did, and there were a lot of nuances in there, so stick with me. This is an important recap. All right, I'll try to make it quick as possible, but I don't want to miss out. All right, so there are some bad news, though. There is bad news in here, not just all good news. We're not in the clear, so to speak. All right, and let's see if I can explain to you why. All right, so the good news is that actually we made some sort of an effort not to completely slide today on Friday. More importantly, the VIX futures, which is what I watch, the symbol is VX on my trading platform, made some lower highs, which it hadn't done before. Every dip in the VIX before was bought, which means that every rip in the market's stocks was sold because they go in opposite directions, regardless of what's causing it. That's the nervousness. Friday was different. We saw some dips in the VIX, which is very, very happy. So the VIX is still elevated. We're looking at the SPY here just for simplistic reason. We'll revisit that a little bit later. All right, so let's go back to this one. This is the week. How did we end up? Now we have the S&P. This is 2 weeks in a row. Every candle is 1 week. Bad, right? But we shook off a lot of weak hands. The NASDAQ will probably show you the best. This was the November rally, basically coming into this year. We completely repriced it out. So if we had fast profits, they booked them, which brings me to a big notion here, which is the good news part, and I'll get to it in a second. This is the small caps right here. Same thing. The small caps were the most hesitant before they rallied, and now today on Friday they retested the neckline of that mega breakout. Those areas are usually support. Why? Because there was a big battle here between the bulls and the bears, and then the bears said, "Oh, I can't take it anymore." The bulls prevailed, right? Well, guess what? When they get back to it, the fight will rage on again. They remember what they did. The buyers and sellers are all the same. They're going to be doing the same thing again. Also threw in FANG and Apple here just for visual effect. Banks are cheap. They got really cheap this week, and they're in the crossfire. With the TNX, the 10-year. If rates are rising, that's what's scaring markets. Rates benefit banks because in theory they should be making more money on the spread between what they pay to borrow and what we pay to borrow from them. So simplistically put, and the industrials also for visual. Transports also could be put in here. I didn't put them in there, but that is on the shopping list for later in the weekend. Okay, I said there's good news, and I want to dissect it. Okay, the good news is that we did have some sort of a stabilization in the sentiment today on Friday. It's no longer one-sided. So there were buyers and sellers, so to speak, on the dips and rallies. Before, and since this whole thing started, it was a sure thing that, hey, the seller is going to win over, the bull is screwed. Today, late in the day, even under pressure, it was not clear. Because the rhetoric, the media, the experts in the media, so they're all singing the same tune, and now they're singing the same tune. That's why I say sentiment is fickle. They trade a meme. Stick to your fundamentals, but you have to deal with the sentiments because if you have fundamental trades, they're suffering or they're winning, so you have to manage the open risk. All right, so if sentiment is starting to, if the fear is stabilizing, so sentiment is going to flip back, and here's my thesis. My layer is. Most of the selling are bulls booking this profit. They're not bears pressing the short. I've said this before several times, but this is a visual. If I bought here and suddenly I have tons of money here, as soon as I start seeing this, I'm out. I have nothing to lose. I'm just protecting my profits. Whereas if I bought here and I started to lose money, I'd be like, oh my gosh, I can't believe it. It's going to turn back. It's going to turn back. These are the weak hands here because they have fast profits. Boom, in and out. I don't care. So they have stop losses or protecting trailing stops. So they say, okay, keep me 15% behind the price so I can protect my profits. So these are the weak hands. So we shook them out, meaning whoever wants to book profits. So all the selling is done by bulls. If that's correct, if my thesis is correct, then as soon as sentiment flips, guess what's going to happen? These guys and gals are going to start buying again, because that's what they like to do. They like to buy. They stop selling. They book their profits. They reset. Now they see, okay, the VIX is no longer a zillion, so I guess I can start doing what I do best. Buy, buy, buy. So I'm not saying load up on calls. I'm just arguing against this debacle that's going to happen here. I think we need another shoe to fall before we fall another 10, 20%, like people are saying. All right, so this is my version of the thesis. If I'm correct that the bulls are the ones actually selling, then as soon as sentiment flips a little bit or stabilizes, the bears are going to be hurting again. That's my opinion. We shall see. All right, so now the bad news. All right, I did mention before I go to the levels here, we'll go to the bad news. What caused this whole debacle? This guy. What is this guy? That's the 10-year. Okay, today it was down, but it recovered off the low, and the markets were rallying with it. I'm not going to spend the time to show you that. All right, I'll go to the 5-year chart. I posted this a long time ago in a different format. I said these two white lines, I said if they break this white line, they're going to get to here. But if they break this one, now we have a weekly and monthly target of way higher. That's almost 4%. If I go to a monthly, you'll see it. So this, if they break this neckline, 4% is a sure thing, because this is some sort of a cup and handle inverse head and shoulder. Regardless, they're attacking a neckline, battle zone, monthly closes. And if the monthly closes above 3.05, sorry, I think 4 is a sure thing. So if they're freaked out about 3, they're going to really freak out about 4. But my point is, this problem is still here. Friday, nobody paid attention to it because that wasn't the hot issue. Now suddenly everybody's looking at the VIX and the evil VIX and XIV and VXX and all of that. All right, so for perspective, I just want to show you the VXX. That's the bad thing that's scaring everybody. Now, is this a chart that should scare anybody? I don't think so. Here's the weekly version of it. It's a dying thing, right? So in theory, the VIX should go to 0. This is what scared everybody, right there. Are you kidding me? All right, so is this a daily? Nope, this is a daily. All right, so this is the tizzy we just had. But the real problem is the media's fear of 3% rates, like it's this giant line in the sand that the world is going to end. So hopefully we worked that out of our system. But what caused that meme to start is the underlying problem with inflation. All right, now the Fed, who controls the rates, the perception is that they control the rates. They are driven by their mandates, one of which is controlling inflation, and the other one is jobs. So we don't have a jobs problem, but they made it a problem, and I'll tell you how. For the longest time, they're aiming for 2% inflation, and we're nowhere near it. They couldn't move the needle, even though and I know we're paying more. The cereal boxes are smaller, the milk is costing more. Well, not milk, it goes up and down, but things cost more now. But for some reason, they can't measure it. So what did Yellen say? Let's do smoke and mirror. Instead of just looking at inflation, we're going to look at wage inflation, because that's a better gauge, and we're going to switch things around to start looking at wage inflation. So the jobs report came out super good, and wage inflation or hours worked or something that shows that wages are becoming a problem with efficiency and availability of the right kind of jobs. And that's going to cause people to get paid a lot more. And if people get paid a lot more, they're going to spend a lot more, thereby creating inflation. That's what freaks markets out. That is the point. So inflation. So next week, the only thing I'm watching are the reports on inflation. I think they start on Tuesday. So I'll look at the calendar and double check that. So that's why I'm saying we're not in the clear yet. There's a big problem that could be brewing next week. Keep your eye on it. All right. So as far as levels, I'll cover them quickly. I think this was okay. The S&P They priced out. This is a daily. This is the SPY daily. This was a neckline from which we broke out. Huge rally. Psh, all gone. Look at the bottom of that candle. So this morning was pretty stinking scary, Friday. Okay? Emphatic rejection, doji candle, and I'll tell you what that means. It's where they open and close about the same place, which means indecision, because they open, they say, I love it, and no, wait, I hate it. No, wait, I love it. No, you know what? Let's just close it exactly where we don't know. So that's why it's a doji, the candle itself. So this is the NASDAQ. This was not the close, so it got a little better later, but I was showing levels. So we tested very low level. I don't know what time of day this was, but anyway, so the levels I would look for is somewhere around 6,200. This is the NQ minis, so basically the NDX, somewhere around 6,000 and somewhere around 5,800. So those are the grosso modo levels. A little more detail on the small caps, but same concept. Talk about doji. That little stick here, that's a candle. You can't even see anything because they opened and closed exactly where they were. So talk about indecision. Usually indecisive candles are followed by big moves, up or down, unknown. But this is a bullish bias because they closed towards the top, left a long tail on the bottom. So the bottom was emphatically rejected, but it was stinking low. But look where it was. Look at that. Right there. Scene of the crime. Oh, one thing I forgot to mention on scene of the crime. Maybe I can show you in a little bit. Okay. So trading note. If I have any greens, if I get any profits from any long I take, I book fast. I trail. Why? Because technicians that I know and trust expect another dip even bigger than this one. So they expect, let me see if I can visualize it. This zone to be tested. This one right there. This neckline. All right. So, and if not lower. So what if they're right? I hope they're not, but what if they're right? Protect yourselves. Shopping list. I will have a shopping list for us. It'll probably include most of these names here. Not most of them, but all the big guys, banks. I don't know about healthcare, but there are quite a few out there. We'll check out. All right. So I wanted to make a point about flip and scene of the crime with the VIX. So give me a second. Okay, I think I got it. All right, this is for visual representation. This is the VIX futures, which is what I watch. I don't watch the VIX. It's kind of a broken tool. VIX futures tell a better story. So this was the big freak out. VIX shot up and caused the whole problem. People that were short VIX, they were dead financially speaking. Okay. Now, we have gone down since then, lower highs. This is a 30-minute chart. So lower highs, but we held a floor, and we've been holding that floor. Okay, if I zoom in here, you'll see the same situation, only today the floor kind of broke, which is why we closed well. But here's my point. Now, if big money was stuck in the wrong side of the thing here, this poke right here today, which was the middle of the day freak out moment that we had, which was this one right here, could have been the big money trying to walk prices up there in order to get out of their bad positions. Just a theory. Can't prove it. We'll see. If this will mark the actual bottom in this correction, then I was correct. Because look at the volume, how it dwindles. And intraday, this volume, this last poke was really thin. And the drop was a lot thicker. You can see by these little tiny dots. Anyway, just a thought that maybe, just maybe, this afternoon, Friday's afternoon episode was maybe the final to get out of those bad positions. All right, Nick signing out. If you have any questions, let me know. I try to do my best to keep it short, but sometimes it's important.